Hey there, and welcome to Talk ETFs. My name is Sumit Roy, and I'm Senior Analyst here at ETF.com. This week, I'm speaking with David Dziekanski, who's the CEO and CIO of Quantify Funds. David, great to have you on the show.
Thanks so much for having us today.
So, David, I want to start off by asking you about the fact that you have been nominated for ETF.com's Crypto ETF of the Year at the ETF.com award show, which is going to take place in April. How does it feel to be nominated?
Honestly, we're just very honored to be included with some truly amazing products and firms that are in this category. Very honored with such a young firm to be nominated for three different categories, as you mentioned, the crypto ETP, the commodities ETP, and the ETF Issuer of the Year. Just again, we're sitting next to some very, very talented individuals and firms and honored to be considered in the category.
Absolutely well deserved. David, I want to jump into one of those ETFs, which is the stacked Bitcoin and gold ETF, BTGD. We saw a ton of spot Bitcoin ETFs launch last year after the SEC approved them. Most of them were just simple spot Bitcoin ETFs, but yours was kind of unique. It combined Bitcoin with gold. What is the thesis behind this ETF?
Absolutely. So this is the STKD, short for Stacked Bitcoin and Gold ETF, as you referenced, ticker BTGD. The idea here is $1 of investment in this ETF will give you both $1 of exposure to Bitcoin and $1 of exposure to gold. So we think of it as a 2-for-1 prepackaged currency debasement hedge. It's in the category of structures called portable alpha, which is not new, has been around for a long time. PIMCO actually kicked it off in the 40 Act product world with their Stock Plus fund that's been around for a very long time. And in the last couple of years, we've seen significant growth and adoption in the ETF space. So we wanted to do it here with, as you alluded to, both Bitcoin and gold, which we view as two assets that don't always trade with correlation, but sometimes trade with a similar theme. So we like to say it's a 2-for-1 prepackaged currency debasement hedge, almost like combining two similar themes into a single ETF. The beauty of this is because we have two assets that are somewhat diversified from each other, we get to rebalance between the two. And these are actually leverage ETFs that are intended to be held for longer than one day. We'd like to use the phrase leveraged for the long run. So this is designed for both traders and allocators to use. But for the RAs and advisors out there, this is a suitable product for a model portfolio that doesn't come with the daily disclaimer of intended for daily use. This is fully capable of being held for the long term.
Interesting. And it's not it does use leverage, right, David? So some people might think, I like Bitcoin. I don't want to give up, any upside in Bitcoin. You wouldn't necessarily be doing that with this ETF. Is that right?
Yeah, no, because of the use of some leverage, you don't actually have to give up any allocation to Bitcoin if you're considering using this ETF in replacement of a traditional Bitcoin allocation. As we alluded to, it's a 1-for-1 exposure to both Bitcoin and gold. A simple way to think about it is you could think of a 50-50 mix between Bitcoin and gold times two. So each exposure is 100%, and quite frankly, you don't have to choose between what we think are two very good options to protect against currency debasement, printing by central banks around the world, a nice allocation sleeve that will house both your kind of precious metals and crypto allocation in one.
That's great. David, I want to talk a little bit about the individual assets right now, gold and Bitcoin. This year, we've seen a lot of volatility already in financial markets with the DeepSeek and then the tariff saga. We saw gold just, continue to climb. It hit a new record high a few days ago. Bitcoin's been a little bit of a different animal. We've seen more volatility. It dropped 10, 15%. Is that what you would expect? Are they different assets? They're not necessarily, they both considered safe havens by many investors, but clearly they're acting a little bit differently.
Yeah, absolutely. They're sometimes invested in based on a common investment theme, but they do act very different, which is the beautiful design of this product that there's significant correlation benefits to owning these two asset classes together. We find that oftentimes people do who own one or the other own both in their portfolio. But just doing the difficult thing of actually rebalancing on a regular basis is something that is much more difficult for people to do in reality. Were you buying Bitcoin at the bottom of the crypto winter? Were you selling Bitcoin when it hit 108 and buying gold? And are you now trimming your gold and adding back to Bitcoin? These are all the dynamics that are happening within this fund. But Bitcoin is moving more correlated to equities, while gold is more correlated to fixed income at the moment. And there's also a lot of political headlines that is moving the volatility of Bitcoin as well, obviously with the Trump presidency and the Trump coin and Melania coin, et cetera. And there's more and more news coming out from our very, very friendly crypto government that is going to affect the price of Bitcoin less so than it will something like gold.
So David, you got this really interesting ETF. What else can we expect from Quantify Funds going forward? Do you have anything in the works?
Yeah, we have a number of funds in registration that are still in quiet period, so we can't really discuss them, but you're free to Google them and look them up. And we're excited to hopefully come back on and talk about them once we're able to talk about them in greater detail.
Fantastic. Would love to have you back on, but I really appreciate your time. Thanks so much for coming on and explaining this really interesting ETF.
Thank you so much for having us today. We appreciate it.